Sarah, you see Snap shares trading higher in after hours. I believe that was up about 10%. This is after the company reported revenue and daily active user growth that exceeded expectations. Revenue coming in at 462 million, beating projections of 431 million and up from 320 million in the year ago quarter. The company is saying it experienced high growth rates in the first 2 months of the quarter, which offset some lower growth in March. EPS is an 8-cent per share loss. That's 1 cent worse than expected, but still better than the year ago numbers. Daily active users also coming in stronger than expected, 229 million DAUs in the quarter. That's about 5 million better than what was projected. And the addition of 11 million in that first quarter. Average revenue per user up 20% year over year to $2.02 per user. Now, the company said it isn't providing guidance, but if you look in the prepared remarks, they give us a hint of how things are going in the second quarter so far. They say that second quarter revenue growth through April 19th is up 15%, and they're assuming the addition of about 10 million daily users in the quarter. Guys, back over to you.
Julia Boorstin. Julia, thank you. Ed Lee, looks like Snap is also a beneficiary of the stuck-at-home economy.
Right. I think people are stuck at home. They want to connect with friends and family. Snapchat, along with other social platforms, they're going to benefit from that. So I'm not surprised by the DAU number, but I'm actually stunned by the revenue beat, and that's a very positive sign. You know, it still relies on advertising. Advertising, as we know, has been sort of cut everywhere. We're going to see that at Google and Facebook. The difference with Snapchat, though, is that they rely less on that sort of long tail mom and pop small business advertisers the way that Facebook and Google do. They actually still get those big, sponsorship deals and those big sort of, branding deals, and they sort of lock in place for longer. So I think they're benefiting from that along with the rise in audience. Of course, once they start sort of really ramping up their programmatic ad machine, then they're going to tap more into that long tail mom and pop advertiser. And had they done that sooner, you might have seen a more difficult revenue period for them. But I think this is a testament to their sort of slow move into programmatic. At least it's helped them in the current quarter or in this past quarter.
I mean, that move also nearly takes Snap into flat for the year type territory. Chipotle's gains, if they stand still around 4 or 5%, takes them flat for the year. Netflix was already up 34% for the year and is adding to that. Mike, I thought this quarter we were saying earnings don't matter. I mean, I get that these are three companies we're talking about that have some beneficiaries to the stay-at-home factors, but they've all, well, actually, we kept guidance, didn't we, with Netflix? But Chipotle's removing guidance going forward. We thought that backward-looking factors wouldn't matter, but they clearly do.
They matter in the moment. I think they don't matter as much in aggregate, if that makes any sense. I mean, in terms of what S&P 500 earnings are going to be this quarter, I think it's anybody's guess. But in individual situations, especially three companies that are riding longer-term secular trends that seem to be to their benefit, I do think, obviously, you get a reflex reaction in this way. By the way, Snap was also cast in this bucket. There's a lot of concern growing about general advertising volumes going out the next few quarters. So they probably did get perhaps a little bit punished by that leading into this number. And their ARPU number obviously was a little bit of a relief on that front.
The average revenue per user
That's
there.
right.
I mean, I would just say, Wilfred, that the thread on all three of these names are benefiting from the shift toward digital behavior, both for Snap, obviously, for Netflix, but the Chipotle digital sales growth of 81%, accounting now for more than 26% of their business, is an impressive number for a restaurant.